Hello and welcome to DIY Stock Picker channel. I'm Arshad Ahmed, founder of DIYStockPicker.com, an investment portal dedicated to help investors make intelligent decisions. Last week, we analyzed the AI stock and it has given a clean 15% return over the past week. Today, we're going to analyze the Splunk stock. We'll do both a fundamental and a technical analysis. However, this video is only for information purposes and this is not an investment recommendation. So please do your due diligence before making any investment decisions. So let's get started. Splunk is a software that is used to analyze, search, and get intelligent insights from the huge amounts of logs that are generated by applications and sensors throughout the IT world. The company has grown its revenue more than 10 times from January 2013 to January 2020. The company had a revenue of $2.3 billion in 2020. However, in 2021, the company revenues fell down a bit because the company is shifting to a cloud model, and that has resulted in a huge sell-off in the stock. Now all the IT world has shifted to the cloud. However, Splunk's products are installed on premises and hence Splunk is not able to tap into the data generated behind the customer firewalls. So the company is looking to pivot towards a cloud model where it will be selling its product on a subscription basis, resulting in recurring revenues. That will lead to more predictable revenues and perpetual revenue streams rather than selling the product once and booking the profits right there. But this is going to take time and pain, and investors are not very patient in the stock market. So that has resulted in an opportunity to purchase the Splunk stock at a reasonable discount to its fundamentals. Analysts predict that the new cloud revenue can grow up to 50%, resulting in a $5 billion revenue by 2025. So let's get started with the fundamental analysis. The current stock price as of this video is $118. If you look at the 52-week range, it has fluctuated between $110 and $225. So Splunk is actually closer to its 52-week low. The market cap is $19.3 billion. The price to sales ratio is closer to 9. Price to book is 12. It's better to look for companies for price to book between 1.5 and 3. But for technology stocks, it's very difficult to find. We see that the debt to equity is 1.44. This means that the company has a debt. The gross margin is 75%, so there is no calculation for return on assets and return on equity. Let's take a look at the balance sheet. The company has cash of $1.7 billion on the balance sheet. The current assets are $3.2 billion. Total assets are $5.8 billion. Company has a long-term debt of $2.3 billion. The cash from operations has been negative for the past 2 years. The company is burning between $190 million and $288 million per year. So how was the company able to raise so much cash on the balance sheet? That is by raising debt in the capital market. The company has been issuing debt consistently for the past 3 years. $2.1 billion raised here and $578 million raised by issuing debt. Let's do a technical analysis for the Splunk stock. Here I have pulled up the weekly chart. On this, you could see I have used the 4-week EMA, exponential moving average. I have added the RSI and the MACD. If you look at the 4-week EMA, the stock price has been consistently adhering to the 4-week EMA. The RSI looks oversold and it is slowly trying to bounce off the oversold level. So it has room to run until the overbought territory. If you look at the MACD, there is no clear signal from it. Though we can see that the gap between the MACD line and the signal line is reducing. So the signal line may cross over and the MACD line can go over the signal line. However, if you take a look at the MACD line, the difference between the 12-day and the 26-day EMA has been negative. So to see there is no clear signal from the weekly chart. However, the RSI is giving a signal of oversold and the stock has been respecting its EMA. The trend looks downward though on the weekly chart. So let's go to the daily chart. Now here's a look at the daily chart. We are right now using a 12-day EMA and we look that the stock has gone below the 12-day EMA here. But now it is looking to break off the resistance level and it has put a candle on top of the 12-day EMA. The RSI has been bouncing off the oversold and is navigating towards the overbought, but it still looks oversold. So there is room to run. The real signal we look is from the MACD lines. The MACD line is now crossing over the signal line and is going to look to enter. So this is a bullish signal. However, we look that the MACD line is still negative on the daily chart, but there are some encouraging signs on the daily chart. Let's now take a look at the 2-hour chart and things look very interesting over here. We are using a 40 period EMA on the 2-hour. So each day has about 4 time periods. Since it's a 2-hour chart and there is 8-hour trading day, so there are 4 time periods. So we're using for the past 10 days how the stock has performed. And we look at the EMA The stock price has been consistently below the EMA, which is not a buy zone. If you look here, the price has made a move and has closed about the 40-day EMA. And it has put 4 candles consistently for 1 day. We look at the RSI line, it is still not entering the overbought territory. So there is still some room to run over here. The most important signal is from the MACD line. The MACD line has crossed over the signal line and has entered the positive territory, meaning that the trend has been positive overall. So here is the strategy I plan to use. Ticker is SPLK. I'm planning to put a buy limit order for $115. Put a stop loss at $112. And I think the price target would be $129 based on the runoff it is having. If I don't get it for $115, I don't plan to buy the Splunk stock. So if I have $1,000 to invest, this is how I would purchase the Splunk stock. Buy 8 shares which cost $920. We have a stop loss at $112 and we have a buy order at $115. So there is a loss potential of $3 per share. We are purchasing 8 shares, so the risk is $24. We are trying to push for a price target of $129, but again, this is not definite and we'll have to watch the chart on the 2-hour level to see if it reaches this level. However, the potential reward is about $14 per share. We have 8 shares, so 14 multiplied by 8, that gives a reward opportunity of $112, which is about 10% return on a $1,000 capital.